Hi, my name is Deon Rebello, and this is a Bullion Vault. Hi, Willem, how you doing?
Well, thanks to yourself, Deon.
Good. Episode 38. We've now gone into officially the final quarter of 2025, and the precious metals over the last week have been on a trajectory which would be translated literally to a rocket right now.
Yeah, I mean, we're living in, I think, historic times at the moment. If you take a look at it, every time we sit down here and we start talking, we're talking $100 up on gold. We're seeing silver reaching for that all-time high set in the 80s. We'll get back to that a little bit later. But we also see platinum looking towards $1,600 an ounce. I mean, right now it's sitting at $1,583. It's all three of them are going absolutely ballistic. We've got gold at $3,860, and the difference is, usually when we see these record highs, when we see these massively high prices, it goes up, it touches it, and then it drops a lot. Because there's profit taking, there's the correction that brings it down, and usually it's quite a bit that it comes down, maybe $50, maybe $100, etc. But this time, I mean, it's sticking around there.
And then you look at gold, and I mean, we hit an all-time high of 3895. There's been a retrace of, and it's currently sitting around 3,860 odd dollars an ounce. I mean, from last week to now, even with that peak, as you said, it hit and then it just corrected to the lower level. There's still $100 difference from last week to this week.
Yeah, and I mean, if we're looking at it, gold is up. I think it's 102% or something like that. 105% actually, that it's gained over the past 2 years, and it's absolutely incredible. And as I said, once again, the fact that these high prices are being sustained is the interesting thing at the moment.
Well, again, and we've spoken about this at length, is we do know that there's a direct correlation to the US economy, the strength of the dollar versus gold. And of course, the dollar took quite a pounding this last week. Even the rand is up, has strengthened to the dollar to 17 rand 40. 24, sorry, 17 rand 24 from last week's 17 rand 40. So we're looking at a rand that's been in a position now of strength that hasn't been seen for more than a year.
Yeah, and I mean, if we get down to it's not really that the rand is operating
Yeah,
from a position of strength.
yeah.
It's just that the US dollar isn't always doing this that well, especially now. I mean, they just had a government shutdown, and as we said, it's the trust in the economy is being eroded. The U.S. economy is being eroded. I mean, that's why we see so many central banks buying gold. That's why we're seeing these high prices of gold. There's a safe haven demand for it, and yeah, it's really interesting times we're living in, to be honest.
And the important thing here is I mentioned that strengthening of the rand, and yes, you rightfully so said that it's got not a lot to do with our economy, but more to do with what's happening externally. The truth is, we do know that the South African economy is not in great shape. We are going to chat a little bit about that just now, anyway, because I think it's quite important that we just do a reboot, a recheck to see where we are with the SA economy or SA Inc. But the important thing is, as you say, and this is what we've always seen from a trend perspective, is you see these big runs and then you see a big correction and then it kind of goes lateral and then to another run where it increases and so on. But the correction that gap is lessening and it's jumping up a step literally and going down half a step and then going up another two steps and so on. So it's quite interesting. I mean, as you mentioned, and we are going to discuss silver in quite a bit of detail about its run. We're sitting at now at all-time highs in relation to the past. And then, as you mentioned, platinum. I mean, sitting at around $1,580 an ounce. It's interesting. I was looking at some stats that around just after 2020. So we're looking at probably. mid 2020, I mean, we were just short of $600 an ounce, or just over $600 an ounce.
Yeah, and we've long been saying that platinum is due for let's call it an upgrade, and finally the time has come. You can now see the benefits of people who would have bought during that time, invested in platinum, can now actually start seeing those real benefits coming through. And you know, we've been talking about a lot of things relating to platinum. The fact that it's industrial metal, it's a catalyst for thousands and thousands of chemical processes of and especially in the automotive sector as a catalytic converter. They use platinum and palladium, of course, for the catalytic converters to convert those toxic gases back into something that's not quite as toxic. I
Yeah.
don't know how good the gases are, but you know, it's not quite as toxic. And we've also spoken about it before, is heavy vehicles like trucks and the like especially need the platinum because palladium has got a lower melting point than platinum, and the gases being produced by diesel vehicles have much higher temperatures than the petrol vehicle gases, and therefore palladium isn't the greatest metal to use for those. Platinum is actually the better metal to use for that, and I think all of these things is just we're just seeing it all come together, and the price of platinum is reflecting that.
It's quite interesting. I had a chat with a client this week, and they've got a diverse portfolio in physical bullion across from silver, gold, and platinum. About a year or so ago, they were quite keen to get rid of their platinum, and they'd invested a substantial amount of money in it. But you know, at the time, I did say, you know, this is about the long play, and we go on about it. I mean, again, we were chatting about it earlier, where a client's asking for forecasts and where do we think it's going, and like I always say, is firstly, we are not financial service providers. We give out information as a business, which is based on other companies that are market leaders, that have the biggest, most expensive brains available to do these forecasts, and yet all of them are also retracking theirs, saying, you know, we went said 3.5 this year. Did we say 3.5? We went 3.8. Now we're getting, you know, we shot past that, and you know, now the all of those guys are coming out and saying, well, did we say 3.8? We actually mentioned 4,000. If you had said at the beginning of this year that we will see gold hit 4,000, I can guarantee you that 90% of the market commentators, and I'm talking across the board from the Goldman Sachs, JP Morgans, all the way through, um, including a lot of the big financial houses, none of them would have put $4,000 as where we'd see gold. And let's be honest, we into the final quarter. We still got another 3 months to run, and we are literally just under $100 short of that yardstick.
Yeah, and I mean it's interesting that you mention, you know, we look at the other forecasts and the like, and usually what we do is we look at sort of the general trends, which was the 3,500, you know, actually I think when we started the year it was 3,200 or something
Yeah,
like that.
yeah.
And then it went up to 3,500, and usually what we look at is we've got this sort of general middle of the road people that's forecasted around about 3,200, which we thought was quite a plausible number. Then you've got your sort of outliers, which the guys who predicted 4,000 and the like, um, which we sort of take into consideration, but not too seriously. And then, of course, you have your nut jobs who's talking $16,000 and the absolutely outrageous. But it turns out the outliers were actually the ones that were correct this time around. I mean, yeah, as you said, we were within sniffing distance of $4,000, just under 3,900, and it's absolutely insane to think we came from $2,000. I think that's $2,060 or something like that at the beginning of the year, and look at where we are.
Yeah, and again, I think it speaks very much to the economic climate right now, and the lack of trust in the US dollar, the lack of trust in the different economies, and they are, you know, from a debt to GDP ratio, they are overburdened with a hell of a lot of debt. And again, this is starting to really create a lot of movement out of traditional investments such as bonds and equities into gold because of the reliability. Firstly, it's geo neutral. You can go anywhere in the world and you'll get the equivalent price in a different currency, but it holds value throughout anywhere in the world. The other thing is it's also currency neutral. I mean, if we talk currencies, it's right now the third most used currency in the world.
Yeah, and I think the most important thing you've mentioned there is it's not just a monetary hedge. It's not a hedge against fiat currencies. It's a
Yeah,
geopolitical hedge.
absolutely.
And that's why central banks are so keen to invest in gold, and that's why we've seen this surge. I mean, if you look what's going on around the world, it's incredibly volatile at the moment. And politically as well as financially. I mean, and if we look at two of the biggest countries that's buying gold, it's Russia and China. Raina and Chasa. It's China and Russia. And it's clear that there's an effort being made here to break that dominance of the US dollar towards de-dollarization. And this could, sort of evolve into a whole new world monetary order.
Well, I don't think could is actually the word. It's almost it's inevitable that we are, and there's a lot of discussions on how that will be. Will it be a crypto-based currency and so on? But we definitely moving into that phase now within the world that the dollar as the global currency is no longer. And we've seen the growth of Bitcoin and cryptocurrencies, but equally we've seen that reliance back on gold, whereas like it's quite ironic. Is literally 5 years ago, if you'd mentioned, well, we've been talking about that for the last 5 years, gold and bullion and physical bullion specifically, but yet we were the outliers. We were the people that considered, that those aren't real investments. It doesn't give a real return and all these things. And however, it's changed. Now, we've said, and I mentioned it many times, and for me, it's such an important part of gold's trajectory right now is its reclassification in Basel III as a tier one asset. That tells me that even from a financial institution perspective, they realize that gold holds significant value within that investment market, within the investment economy.
Definitely. And I mean, if we just look at the central bank spending that's going on towards gold, the amount of gold that these central banks are buying, another interesting thing to note is that, well, the US holds the greatest gold reserve in the world, officially. And we're talking, I think it's I got the figures here somewhere. Let me quickly see if I can find it. I think it's something like 8,000 tons or something like that. And the thing is that China and India, especially, because India do love their gold. If we look at China and India, they still got a long way before they catch up to that. So in a way, that also decreases demand among central banks, and that also plays an effect on the actual price of gold. And this demand is, there's this demand for a real asset, for something tangible that isn't dollar based, is what a lot of these central banks are going after right now. And I think that's also playing a big part in this rise of the price that we are seeing at the moment.
Absolutely, and again, as you mentioned, as you said, I mean, the US sits on over 8,133 tons officially. We know, and a lot of the times these are understated uh, volumes that are held. Germany coming in second, Italy third, and then France, and then of course Russia and China fifth and sixth. And Russia officially says they've got over 2,300 odd tons of gold, and China says they've got around 2,280 tons of gold. I think it's highly understated, those figures. If we see the buying of those different countries within the gold sector, it's unprecedented right now.
Yeah, and I mean that's just the central banks we're talking about.
Yeah.
As we know, in especially in India and China, gold is extremely popular among the general population. There has been a massive increase in demand for gold from the general population. I think we were talking about it a while ago, that the new massive gold reserve that China had found at that stage would only serve their demand from the population for gold for something like a few months. And it's crazy. And it was one of the biggest gold finds in history. So yeah, when you say it's understated, we're talking central banks, we're talking holdings of the country.
Mm.
But if we actually look at the holdings of the general population, especially in India, especially in China, I think there's a lot more gold in those countries than we can actually calculate.
Yeah, it's interesting. I mean, I'm busy with a project in one of the other African countries, and for a long time we've been looking to get into the investment sector with a gold product, a physical gold product. And I mean, we are at quite advanced talks already in one of these countries where we've got one of the biggest hedge funds that are interested in actually developing a fully physical gold product that they take into market.
Yeah, it's I think people are starting to see the value of actually owning physical gold as an individual. You know, as we've stated, it's a geopolitical hedge. So it's not only about your fiat currency in your country losing value and you're hedging against that, but it's also a hedge against whatever happening around the world. It goes, it's about more than just looking after yourself in your little pond. It's about looking after yourself in the big pond, which is the world economy.
Yeah, and with the modern world we live in, it's so that as far as the that physical size, it's changed because of the digital amalgamation of all this technology that draws us in closer. And yes, I think gold is poised to continue growing. Again, before the podcast, we were discussing a client also wanting projections and understanding where it's going. We know that it is going to continue to grow. At what pace? We continue revising it. We continue looking at the market. To say that 4,500 by the end of the year, it's insane to even say that is possible because at the beginning of this year, that would have been a stretch.
Definitely. And yeah, as I said, we're living in historic times when it comes to bullion at the moment. I mean, let's move on to silver. Just
Yes,
have a quick discussion on silver. If we're looking at silver, it's currently sitting at $47.54 when we started this podcast.
yes.
And I mean, if we look at it, we're coming close to actually reaching the all-time high set in January 17, 1980, which was $49.95. Now, that wasn't exactly achieved, honestly. Let's just put it like that.
Yeah, well, I think it's quite an interesting story about the Hunt brothers and how they did the actual squeeze on silver and they artificially created this bubble, this massive increase in the silver price.
Yeah, basically what they were doing, they were cornering the market by not only buying physical silver, but they were buying silver futures. And then instead of taking the cash payout from those silver futures, they were demanding actual delivery of the silver. So they were, as you said, they were artificially inflating the silver price and it hit $49.95, which is still the all-time high for silver, but they missed a call. They missed a margin call and this price plummeted to $10.80.
Overnight, literally, I
Just
think.
about overnight. Yeah, it became known as Silver Thursday.
Yeah.
And obviously, as you said, it was a bubble. They created an artificial bubble. And the thing with bubbles are they burst.
Yep.
It's as simple as that. If we look at the dot-com bubble, all the bubbles throughout.
Housing bubble. The current bubble that the US is sitting on right now, that there's a massive bubble, overinflated markets, unrealistic pricing. S&P 500 is showing that it's very clear that this growth in relation to the economy is not making sense. And that's a bubble.
And the thing we've learned about bubbles is they always burst. And well, as we said, it went from just shy of $50 to $10.80 almost overnight. And this actually, Mike Maloney discusses this in an article. Our favorite silver pundit, Mike Maloney, and he states that this started a 45-year cup and handle formation, and it's already fired what he calls the silver slingshot. If we look at it, silver is up 63.5% year to date. I mean, that is absolutely insane. And over the past 2 years, silver has gained 120%. Now, we keep talking about gold. We keep talking about how well gold is doing. But if you look at it, gold is only up 105% over that period. I actually think this is a little bit outdated because it's from last week, and
Yes.
it's frightening to
In the
say
world we
that.
live in, that it's outdated. Yes.
It's frightening to say that, like, it's from 3 days ago, so it's a bit outdated. We used to have these statistics and we'd run months with them and they would still be quite relevant. But anyway, and so over this period, silver is up 120%, gold is up 105%, and the stock market was up 55%. So it just gives you an idea of how high silver really is at the moment, how well it is actually done. And now here's the thing. If we look back a few years, you remember the Wall Street bets with
Yes.
silver.
It's about 2 years ago, 2.5, maybe 3 years ago, actually.
Yeah, and basically what happens is we had a bunch of guys on Reddit who decided to, once again, collude and sort of try and inflate the price of silver. And we saw silver going up significantly.
Yeah, I think at the time, in relation to now, it's laughable. I mean, but I think we broke $30 an ounce. But we were coming from a very low base. If you think about it, around 2020, we had quite a low drop to around $12 an ounce. So from 12 to 30, built up through that period. And as you say, I think it was January, February of either 22. Yeah, it was January, February of 22.
Yeah, so basically what happened was, it was getting put out in the media and awareness was being raised, and everywhere you looked, there was silver. And what's happening now is pretty much the same thing, except it's happening organically.
And it's coming from the driven statistic, or the driven figures, specifically on the industrial applications. So we know, and we've mentioned this also many times, your photovoltaic, your sunscreens, your solar panels. And again, that market has consistently over the last 3.5, 4 years run at a 20% per annum margin of demand and growth.
Yeah, and what's happening is silver price is going up. More people start talking about it. So instead of having, sort of this once a year somebody says something about silver in the media, you now start to sort of see monthly
Yeah.
somebody saying about something about silver. Then it becomes every week somebody's talking about silver somewhere, and eventually it's every day somebody is talking about silver. And the amount of media that we consume these days, I think it was a few years ago there was something that said there's more information in the Sunday Times than somebody in the Middle Ages would have come across in his lifetime.
Yeah.
And I mean, if you consider that's just the Sunday Times, the amount of media we consume on the internet, on social media, on forums, television, wherever, is absolutely insane. Now, you take everybody seeing something about silver every day, and FOMO starts kicking in. People want in, they want to buy, and we're back to the Minsky Kindleberger model. We've had the stealth phase where it was quite silent. As you said, it was down to $12 in 2020. And then the institutional investors sort of started buying it because they can see this demand for silver, they can see the deficit, and it starts creeping up. Eventually, it becomes a public sort of mania, and we get that massive uptake, we get that massive upward slope, and the price goes through the roof. Yeah,
Well,
$50, not so crazy anymore, and then we're in unprecedented territory.
on the $50, it's inevitable. We in that space. Will we sit in by the end of this year, considering we now officially into the last quarter? It's highly likely. Based on the current projections, the current growth rates, it definitely does look that it will break that $50 mark. And there might be a retracing back into the mid 40s or to the high 40s. But I do see that we're going to test it without a doubt. But what's interesting is that when that whole Reddit and Wall Street bets a phenomena or event happened, the first thing I did mention, and I'll always remember this, is we'd opened the whole new generation to physical bullion. So your 20 somethings and all of that group of people were now exposed into precious metals. And that was their first taste, where it was similar to what happened in the 80s with the Hunt brothers, but suddenly now they start to see there's this awareness, they see the growth, and now the growth is real. When it happened with the Wall Street bets groups, I mean, it shot to 30 odd thousand, $30 an ounce, and then there was a retracing to the low 20s, and it stayed there. So it was a massive jump up and a massive jump back down. And it took, I think, about probably 18 months to get to 25 and then to go higher. And again, it stayed in that mid 20 zone for most of 2022 and 23, and even 24 we saw that, but we start to see a trend changing. And the current trend, as you mentioned, we have these pushing, breaking new levels, and the retracing is that little bit less, the coiling and that building momentum into the next growth phase.
Yeah, and we're seeing that across all three metals. But it's funny because we were sitting, I think it was sort of middle of the year, a few months ago, we were sort of talking about where we see silver going, and I think you said $45 or something like that, and I said, nah, you know what, I think that's a bit of a stretch. I'm saying around about 42, and you know what, I'm not scared to admit when I'm wrong, and boy was I wrong. Right now, I'm going the other way. I'm saying I would be surprised if we don't see 50 this year.
Yeah, I think right now, based on the current growth, that 50 is inevitable. I've used that now 3 times in this podcast. I feel like, what's his name, old Thanos from, what was that? Um,
Avengers.
The Avengers. Yes, I saw it with my son at the time. And but it is. I think we in that phase where we're going to test 50, and the current market interest in silver, as you say. And what's interesting is it also goes back to a lot of what we speak about, the performance on silver and gold and that relationship, the gold silver ratio, where traditionally silver is slow to perform with gold. Gold sets the basis of the growth, and then silver catches up and then surpasses in actual growth. And we now got to that point where it's crossing over, and now silver's starting to take that actual growth in percentage at a far bigger level to gold.
Maloney silver slingshot.
Yes,
Yeah.
there you go. Yeah, and just any other thoughts on the silver with regards to this specifically?
Well, I think what's happening right now, as we said, it's going through a historic time. If we look at how far it's up at the moment, and yeah, the pullbacks, retracing is not as great as we've seen in the past, and with all three metals, they're going to record highs, and usually where they would hit those highs, come back down, they're tending to stay around those highs a lot longer.
Yeah, and again, I mean, we look at just the general market. I mean, the liquidity is drying up. There's this movement to silver. Even within this article, I mean, old Maloney, they do talk about that, within the London bullion vaults, they used to have a certain level, a gap that was held, and even that percentage is narrowed from the physical versus the paper. And it's quite interesting that there's a sudden waking up from the institutions, your Morgan Stanleys, where they talk about the clients moving away from bonds and now going into silver as an option. I had a client this week talk to me about, they definitely they need to get into bullion, because they don't have any exposure into it. So what do I suggest? And I said, gold has been consistent and strong. But then, to buy an ounce of gold in dollars, you're looking at 3,800 and nearly 90 odd dollars an ounce. Or, in rands, that's over 65,000 rand.
It's actually over 66 now.
Yeah.
I've been watching that climb over the past few days.
Yeah, and you think about it is it's a lot of money. Whereas an ounce of silver, and even that, I mean, I was talking to a client this morning, and our little 100 gram bars, a couple of years, you could get them for around 1,500 rand for a 100 gram bar. Those are now over 3,000 rand.
Yeah, I was looking at that the other day, and I'm looking at the just where it's sitting at the moment, and I just went, wow.
Yeah. But again, as far as the question, from the client is what would I recommend? Silver is definitely looking strong. Performance is good. It's a great entry level, especially on smaller amounts of money. So if you got 30, maybe 40, 50,000 rand, invest it into silver. You can't go wrong. Again, and this is very important, is you buy today, you got to have the view that you're going to hold it for at least 18 months to 24 months, if not more, that you're buying and holding. It's not buy today, win tomorrow. It may go up to $55 in the next 6 months, but it may not.
Yeah, and this is the thing, it's always, as we've said, once these prices start rocketing like this, people always come and say, "Okay, I want to get in now. What do you suggest?" And I almost want to tell them a time machine.
Yeah. If only you'd listened. And we've also had the clients that come, and it's a year, 2 years ago, I had a client where she was not sure, she wanted ounces of gold, and she didn't know, and I'd said to her, listen, it's entirely up to you. I will not pressure you into buying, and you got to feel right, and it's got to be right for you. And then she came back to me, I think it was June this year. And I was like, do you realize that in the space of that 8 month period, that gold had literally shot up, and she would have made massive amounts? But again, the converse is that it could have dropped. Realistically, in the market we're in, it's highly unlikely. But to what growth can we expect over the next year? I don't know. Towards the end of this year, we're going to probably have to get into our time machine and shoot ahead to see we're going. I mean, we're going into 2026. We're now heading towards the second half of this decade. So 2030 is quite a nice earmark as far as where will the prices be. Based on the current growth, I shudder to think what gold will be. Realistically, I think $10,000 is not unrealistic by 2030.
Well, the other question is, are we still going to be saying $10,000, or we're going to be talking euros? That's
Well, again, and that was that where we spoke about geo neutral. If it's not in dollars, it will be in rands. If it's not in rands, it will be in euros. It will be in pounds, or it will be expressed in crypto, Bitcoin. But we'll still have a value to the relative pricing now.
yeah, and I think it's not an insane call, just purely because of where the world economy is, where the US economy is. Um, how long is it going to sustain its immense levels of debt? And the US debt is growing by the second. It's sitting in the trillions of dollars, and it's uncertain times. I mean, that's about all we can say about it at the moment.
Yeah. And again, for the viewer, make sure you always do your homework. Go and check. There are a vast amount of people offering, and I mean, we go online now, you see adverts, but again, also be discerning. Um, Anyone promises you that a shiny silver bar or a silver coin it has more value, same weight, than something that is less shiny, and I'm talking about proof coins and things like that, is it isn't. Get your best pricing per gram. Make sure that the purity is important, that it's the same purity. A shiny coin and a matte coin can hold the exact same purity. It's just the minting that makes it look more expensive.
It's it kind of puts me in the mind of buying Pokemon cards as an investment. Um, yes, you buy the shiny Charizard now for $5,000, and it's graded PSA 10, and they tell you, oh, this is going to increase in value. But ultimately, all that's going to be worth is what somebody else is prepared to pay for it. And one reason why I'm using that as an example is because that's what the proof coin is worth. It's worth what somebody's prepared to pay for it, and ultimately that might just be the price of its base metals. It might be the price of an ounce of silver.
And to be honest, that's when we make our pricing, it's based on the pricing of the metal. So for us, we of course make beautiful coins and we're constantly working on new designs. In fact, maybe one of the next episodes, we need to chat about what we've been doing. We've done the pangolin, we've done the wild dog, we're busy with the Cape Penguin, and we've just finished the drawings of the seahorse and getting that busy rendered so we can start to do dyes. So we've been busy there. And again, we do those because people also do want some kind of aesthetic value to it. But is that the important part of it? Hell no. The metal, the purity, and the weight to us, even with a pretty pangolin on it, or a wild dog, or even a seahorse, it's irrelevant. It's the purity, weight that actually matters.
And I think that is pretty much across the board, whether it's a Krugerrand, whether it's a pretty medallion, whether it's got Harry Potter or AC/DC on it, it doesn't make the base metals more valuable.
Absolutely. And, going into the second part of this podcast, I did feel we needed to tie back to the South African economy. I know that we've spoken quite a lot about the US economy, but it affects us so much. I mean, just out this week, AGOA, the agreement that a number of African countries have with the US, and we are one of those signatories to that agreement, which seems to be in the air right now.
Yes, well, it expired on Tuesday.
So it's in the air, but we don't know
And
where.
and the biggest problem is, yes, there's talks of, oh, they're confident it's going to be renewed and the like, and but now the problem is America has decided it's shutting down its government. So right when AGOA expires, the US government goes into shutdown. So it's literally in limbo right now. The people who need to make the decisions aren't there to make the decisions, so it's just sitting there. So what's going to happen? Well, obviously we hope it's going to get renewed, because I think if it doesn't, we in for some really tough times.
So yeah, let's unpack that now. Because if we look, and I mean, one of our top economists within the country, old Darby Ruitt. I mean, he talks a lot on radio. He's always got an opinion. Sometimes I don't agree with him, especially on his forecasts of the rand and the strengthening of the rand. And then when it does weaken or strengthen, then he'll come out and say, "Yeah, it's because of the economy and we're not growing." But the whole point is we're not growing. Period. That there's certain factors like the dollar's weakness that's actually playing into the rand strength.
Yeah, well, look, I mean, whether you agree with him or not, it's a personal thing from person to
Absolutely.
person. But there's a difference between opinion and fact.
Yeah.
Opinion, everybody can have an opinion. He can have his opinion of what's happening. I can have mine. But facts we have to agree on, because they're there in black and white. And the black and white fact says our debt to GDP ratio is sitting at 77%. Now, for a developing economy, that is extremely high.
Yeah.
But it goes even further than that, because it's not just our debt to GDP ratio. The problem is that there's also a lot of debt being held by the government by state-owned enterprises. So 15 years ago, most state-owned enterprises were actually covering their expenses without incurring additional debt. But recently, there's
Not
been
so
high
much.
levels of debt, mismanagement, overspending, and Red actually says there, when the debts are combined with those of the national government, the country's debt to GDP ratio is approximately 85%.
What's interesting, and I'm actually smiling about this, is when the then Tito Mboweni was our finance minister, and I'm sure that was around 2020,
It was around about
2021.
2020.
Yeah.
I remember that preparing that
The,
presentation.
and yeah, we spoke about his October midterm budget speech, which is coming up now for the current finance minister. And if you remember, during that period of time, he spoke about, in order for us to avoid a fiscal cliff, a sovereign default, we needed to reform state-owned institutions. Our municipalities needed to be equally reformed, as they were mostly insolvent and delinquent. And we also had to have a zero increase in wages within government sector, because this is the other thing. Our biggest employer right now in this country is government. and that isn't sustainable.
Yeah, and well, one of the biggest problems is that our debt levels are sitting at 6.5 trillion rand.
Yeah.
So, in essence, every South African basically owes 100,000 rand more than they originally thought. And we looking at you rightly said government expenditure. If we look at some of these things, we're looking at income taxes. Now, 7.9 million personal income taxpayers fund 28 million grant receivers. But it goes even further than that, because these taxpayers also pay for government salaries. So it's government employees, and that takes it up to approximately 30 million South Africans relying on a state income.
From 7 odd million taxpayers.
Yeah, basically 30 million South Africans rely on 7.9 million taxpayers. But it gets even more intricate than that, because if we look at personal income tax, which is the highest revenue stream for government, 978,000 South Africans, or 1.9% of the population, pay 60.9% of all personal income tax. So if we then take a further look at this and we look into, corporate income tax, 1,051 companies pay 72.3% of all company income tax in the country. Companies with taxable income greater than 100 million constituted 0.1% of the total number, but contributed 72.2% of taxable income and 72.3% of excess tax. I mean, it's absolutely insane that such a small portion is paying the bulk of the tax. And that actually brings us to the next thing, which Red talked about, which was the Laffer curve.
I think what's important is, and this is concerning. Again, we are a state that is socialist by nature, and politically, we've always had a stance to be apolitical. But we need to lay down the fundamentals here. We are paying for a big whack of people that are on social grants. Our biggest employer is government, so indirectly, our taxes go to pay those people's salaries.
Very much so. And, we're falling short. South
Yeah.
Africa is falling short by a long shot. So what's the answer?
And on top of it, we have growth rate that's under 0%.
So yeah, that was what I was getting to. So what's the answer? Raise taxes? No, because I just mentioned the Laffer curve, and basically what it states is it's a theoretical relationship between the how high taxes are and your income, and it's sort of a I can't, what do you call it?
Concave.
Sort of a bell graph, I think it's called. So you start off at 0%, government gets no income, and then you start raising taxes, and you get to sort of a certain level, and then that graph starts to come down again, because if you're taxing 100%, what's the point?
Yeah.
Companies will simply pull out of South Africa, move to another point, which they're doing already, which means we are already over that curve.
Yeah.
And that is
what you're saying in a nutshell is the current taxpayers are heavily overburdened on tax. We look on municipal rates with regards to electricity, water, that's all shot up. So the taxpayer that is paying their tax is heavily burdened with all of the municipal debt that they're having to almost cover with their payments to Joburg, to Power, to Eskom, and so on. And that's also where the problem is. That there's only so much you can squeeze out of a rock, literally.
and where we're sitting on that curve right now, increasing tax won't produce further additional income.
I know what will.
Growth.
Exactly. And it's something that we've spoken at length about. And, my background has been from a manufacturing background, and that gives jobs. It builds the country's economy. It creates revenue. We should be a country of exporting. We should be exporting skills like India does with call rooms, call centers and so on. We've got we've got people that are highly qualified that we could be doing a number of different things. We look at a continent that is so desperate in need of structure, and yet within the continent, we're one of the lowest growing countries. And what's crazy is the rest of the continent is flourishing. You go to the different countries like Ghana, like even Nigeria, you go through to Uganda, and a lot of those countries, their growth rates are exceeding ours hands down by quite a large margin.
Yeah, and I think one of the biggest problems we have here is that the money we're spending at the moment, we're borrowing money from the World Bank, from all over. We are so deep in debt as a government that it's going to come and bite us at some stage.
Well, it goes back to old Tito Mboweni and his October midterm speech in 2020, where he did say that, right now revenue is not meeting what we have to pay as far as our debt, our expenses. And we speak about 2020. We know that the loans that were procured from government and all of this, we're getting to the point now that we're not even going to be able to service the interest on those loans. And of course, that then leads us to what I've been talking about for a number of years is a sovereign default.
Yeah, and I mean, we've seen what a sovereign default can do in cases like Argentina, where, the Argentine peso, I actually don't know where it is at the moment, but I can guarantee you it's probably pretty high. It was around about 1,500 or something around there last time I checked. And it's just the devaluation of that currency has been devastating. But the biggest problem is, we've procured more loans since 2020, as you're aware. And as Rit puts it in his article, the problem is that it's not being spent on long-term capital formation. It's being spent on short-term currency expenditures instead of being spent on things like machinery, buildings, infrastructure that can be used to produce those goods and those skills that you were talking of earlier. And I think that's the biggest problem at the moment is we so busy trying to take care of right now that we're not looking and not preparing for the future.
And sadly, that has been I mean, I always think of the Jacob Zuma years as probably the most destructive on our economy, and we're reaping or we experiencing just how bad that period of time was as a country, where money was literally robbed out of this country. Different institutions were given to key individuals, which they had one goal was to take as much money as they could. I mean, you go back to the Argentine peso. I mean, it's around $1,400 to the peso right now. And I know when we did our original case study on that, it was 59 in January of 2020.
That was 2020, yes.
21, yeah. Oh, no, January of
2020, it
2020.
was just before the pandemic, yeah.
Yes, and that was 59 pesos to the dollar. So in the space of what, nearly 6 years, it has eroded from 59 pesos to 1,424 pesos.
Yeah, I mean, I think we're in a bit of a tough spot at the moment, especially with the AGOA agreement up in the air right now. We'll have to wait and see until, the US government can get back in their seats and actually do their job, if they're going to renew that or not. And yeah, but I think there's a lot more reform needed from government.
It's urgent, and again, we kind of get to these dark periods within the podcast that we talk about things that are quite serious and heavy. And my concern is, and I've said this for years, is we need to have reform in this country. We need to start looking at getting back into manufacturing, creating more of an advantage, giving rebates to people producing, that we can get job bases up, make it easier for people trying to start businesses, that it's easier. We can start to actually grow the economy, and the economy desperately needs it.
Yeah, I don't think there's much more that needs to be said.
In closing, Willem, anything else?
No, I think, when it comes to precious metals, just watch this space and keep it in your mind, because this is a historic period for metals.
It's equally exciting as terrifying. And again, the interest that we do receive from clients that are contacting us, or people in general, you see it in the media that there's a massive interest on bullion. My thing, and I always say this: make sure you do your due diligence. Make sure you check who you speaking to. Make sure what they're selling you is, it can be, you can qualify it, you can quantify it, and you know that there is an opportunity here that you can, like I mentioned with South Africa, the biggest problem is the rand is going to tumble. The fact that it's strengthened to around 17 rand 24 uh, doesn't speak of the value of this country. It speaks to a weak dollar. And my thing, and I've said this all along, is we will see the rand go to 20 rand to the dollar. We will see it go to 30 rand to the dollar. And when that process starts, people who haven't put their wealth, or portions of their wealth, into a dollar hedged commodity such as gold, such as silver, such as platinum, where they can start to neutralize some of those losses in actual rand values. And we can only urge people to take it seriously.
Diversify your portfolio. Don't put all your eggs in the fiat basket.
I couldn't have said it better.
So if you enjoyed the episode, hit the like button. And if you want to see more, be sure to subscribe. And we'll see you guys in the next one.
Take care. Bye bye.